Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of July 18th through July 22nd. And inflation is still hot, 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 as we've been saying since last fall. And inflation is not transitory, it's very sticky, as we saw in both the CPI data that we'll take a look at and the PPI data. This week, the CPI data, as we'll discuss further, was as hottest it's been since the 1980s. And again, inflation is very sticky. So please stick around to the end of the video and we'll talk about some trading strategies of how you can trade, how we can make money in an environment where inflation is hot, 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 and inflation is sticky. So we'll go ahead and we'll get started. So here's the notes for our weekly trading game plan, and you can find these notes as well as notes from our previous weekly trading game plans in the Google Drive, link to which is included in the description box below, so you'll have access to these notes and links, etc., that we're talking about in this game plan. Good morning, Tanvir. Thank you for joining us for this week's part one weekly trading game plan. Okay, so we'll start off. We'll look at where the markets ended up on Friday afternoon. We had an up day end of Friday. We can also see a nice little pop at the end market on close. At the very end, we had a little pop, but we still see a lot of weakness under the covers. So most of the stocks are still trading below their 50-day moving average, below their 200-day moving average. But we had this nice little bull rally at the end on Friday after several days of decline. So we'll take a look at in a second. We'll see in the indices, where are we in terms of getting out of this bear market? Are we still in a bear market? Was that just a bull rally in the bear market, a bull trap? So we can see some of the news. Obviously, Twitter's still in the news. Fears of recession, bigger rate hikes. Again, we'll talk about that further relative to the inflation data and speculate on what we think the Fed's going to raise their rate hikes. Natural gas, energy in general was very volatile this week, and actually it presented a lot of opportunities to make money because of the volatility. Both oil and natural gas were jumping up and down quite a bit. We'll see a significant decline in gold. We'll see if it's turning around. And then we see the treasuries were very inverted throughout the week and continue to be inverted. And it's come down a little bit. They were higher and then they've come down a little bit, and that may attribute a part of the pop in some of the tech sectors towards the end of the week. So we can go ahead and look at the indices real quickly, look at the SPY. And again, this is FinViz. This is a tool we use to do a lot of our market analysis. You can find the link in the description box below. Also, the links to all these tools that we use, all our trading platforms, you can find in the links section on our homepage, beachbumtrading.com, bum without the U. Again, you quick access to all these links to all the tools that we're using, so you can get at FinViz, etc. from there. So if we take a look at the SPY, we can see it's still in this declining channel. It's, testing the bottoms and tops, jumping up and down in this declining channel. We zoom out to the weekly. Good morning, Walter. Thank you for joining us. Good to see you again. So again, we can pretty much see, we're still in a declining market, still a bear market. We're making lower lows. We tested and we're unable to break the previous high, so we're still making lower highs, lower lows. So all indications are we continue in a bear market. We're still below the moving averages, etc. So again, there's every indication that Friday was just and you can see that shooting star type or hammer type candle on Friday was a bull rally in a bear market. So we should trade accordingly. We've been talking about this for a long time. Again, we have strategies for trading and making money in a bear market. We continue with those strategies. Part of that is sell the rips, right? sell the rips in the bear market. And until we get confirmation that we're out of the bear market, those strategies should continue to make you money. So if we look at the Qs, NASDAQ, I expect, we're going to see something very similar, although the NASDAQ looks pretty flat. So, it's pretty stable at the bottom. It may have breached the previous high, so the NASDAQ may be stabilizing more quickly than the Qs. We'll have to see if we get an upturn or if it just kind of consolidates for a while and then picks a direction. The Dow DIA, again, Dow looks more stable. So the Dow and the NASDAQ look more stable than the S&P right now. And again, we'll see if we go through this period of consolidation, if it picks a direction. One of my concerns, although that was a pretty good capitulation tail there, we've been waiting to see for that real capitulation, that max fear. Now, as we'll see in a second, one of the indications was that we're not seeing an elevated volatility. The VIX hasn't really spiked up. In fact, it was declining while the S&P was declining, which I found unusual, and we can talk about some of the reasons why that might be the case. So the Russell also, just like the NASDAQ and the Dow, seem to be relatively stable. So, maybe we're getting a bottom forming there. Got a little bit of a capitulation too. Now here's the VIX, and one of the indications that's saying that we're not at the bottom, we're not at capitulation, is we haven't had that elevated volatility. You can see rather than the VIX spiking, which you would expect on extreme fear of capitulation, we saw the VIX decline into, even while the S&P was declining, the VIX was declining. Now, my hypothesis as to why that might be the case is I think people put on a lot of hedges, volatility hedges going into the CPI data. And once it came out and it was hot as was expected, but the VIX didn't pop, I think a lot of people, and we didn't get a capitulation, I think people took their volatility hedges off. And that's why we saw a decline and unwinding in the VIX. Now, the VIX is actually, I think, below 25. Right now, if I look at it right now, it says it's 24.23. So the VIX has actually declined below 25. And by the nature of the VIX, unless we get some event, some piece of data or something happen that kicks it back up, the tendency would be to continue to decline close to 20, and then down to 18, 16. So again, unless we see something that kicks the VIX up, we would expect it to continue to decline. So we could trade that accordingly. We'll see what the next potential catalysts are for volatility in a second. But we'll jump over and we'll look at some of the groups here while we're in FinBiz. So pretty much everything was green on Friday. Again, this was, bull rally. We saw risk on, so pretty much everything was green. But if we go out to the week, we see almost everything was red. But the least red was consumer defensive utilities and healthcare, the most red. We're seeing a sector rotation, in my opinion, out of energy and basic materials, which were the top performers from the first half. And I think, again, we're seeing a sector rotation out of that, profit taking, etc. Again, this is not financial advice. We're not financial advisors. This is educational purposes only. So again, if we look at the month trend, which is a little more indicative, smooths out these ups and downs, we can see the top performing sectors are healthcare, consumer defensive, and utilities. And we'll talk about that. Consumer defensive and utilities are two of the areas that are both best suited to handling this hot inflation. Shorts are being covered. Yeah. Yeah, again, I think that's what a lot of it was, as I think people put a lot of short puts on the SPY and longs on volatility going into the CPI and PPI data, and I think they unwound those after the data came out, and it was, even though it was very hot, it was pretty much as expected. The markets really didn't react overly negative. You didn't see a panic. I didn't see a lot of fear. So even though it was hotter than expected, I think the markets had baked in that it was going to be hot. Okay, if we look at the industries also on the groups tab in FinBiz, and we have videos, there's links to these videos in the notes on how to use both the groups tab and the various aspects of the group tab, and also when we get to the futures tab in FinBiz, we've got more details about how to use these tabs in FinBiz. So we'd recommend those. Great tool. There's a lot you can do with the tool, and we're just showing a little bit. So again, everything was pretty much green. You saw a lot of risk on Friday. I don't find that very indicative. So if we go out to the week, we can see again some of your consumer defensives. We got some energy. Again, energy was very volatile. Semiconductors have kind of turned up. Discount stores were doing pretty well. Reits. The worst performing, again, some of the oil, copper. We're going to see in the futures what's happening with commodities and potential future opportunities in that area. That's looks pretty interesting. Month-wise, we saw a bounce in biotech. Again, I think that's just it was the worst performer for the first half. We also had some M&A, mergers and acquisitions in biotech. I think that gave it a bit of a pop. Again, same discount stores, consumer discretionary or consumer defensives, etc. So, good morning, Clean Slate Trades. Thank you for joining us. Good to see you here. So now let's look at the economic data from last week. So yeah, it was pretty exciting data. Monday, Tuesday weren't, that was kind of the eye of the storm until we hit the CPI data. Everybody was waiting for the CPI data. We can kind of see mortgages were relatively stable. And then we got the CPI data and it was super hot. They were expecting 8.8 up from 8.6 and came out 9.1. So yeah, inflation's hot. Even core is 5.9 versus 5.7. So again, there's no the consumer inflationary side. There's no slowdown in inflation, and we saw the reaction to that. Yields, bonds went up, yields went up, and there was talk of the Fed having to hike a whole point in July because they have to tackle inflation. They're saying inflation, their number one priority, and inflation is out of control right now. Then on Thursday, it's kind of interesting because let me talk about PPI first, and I'll come back to jobless claims. Again, PPI is still hot. It was 8.2 versus 8.1 expected. So that means your inputs into inflation, that's the producer price index, so your inputs into products is still a little bit elevated, but not as extreme as the consumer. So the curve may be slowing, but it's still increasing. So again, inflation's sticky. It's going to continue to be hot for some period of time. So if we talk about jobless claims too, the continuing was down just a little bit, so that was positive. And the initial was a little higher than expected. So the job market's still very tight. And so, the Fed's saying, and there were a number of Fed officials out talking about, there's 75 basis point hike in July, that higher than that at 1 point's not necessarily off the table, etc. But they're buoyed up by the fact that the economy's strong, so it can handle interest rate hikes. So again, that's reason to believe they'll hike at least 75 points in July. The natural gas storage was stable. Again, that caused some volatility in natural gas. And then Friday, we got retail sales. Retail sales in June came out pretty good. And so that accounts in part for the pop in the markets on Friday, as people viewed that as positive. The retailers did better than expected. And so they said, okay, well, the consumer is not stopping spending, and maybe we won't go into a recession as quickly, or it won't be as bad. We also got the consumer sentiment data, and it was a little bit better, although this is still the second lowest, so it's still bad. But the fact that it wasn't worse than last month, and they expected it to actually be worse, again, kind of buoyed the markets up on Friday, and so we got a bit of a pop on Monday. So now let's look at the economic events for next week. And just while I'm here, and again, you can find these reminders in the notes, is the next FOMC meeting is the 26th and 27th. So that's really the next big catalyst, other than earnings. We'll talk about earnings in a minute. But the next big catalyst, when we exit the eye of the storm again, will be the end of the month. And again, there'll be all kinds of speculation about whether we're going to have a one full point interest rate hike or 0.75. I'll throw my opinion out here now. Granted, it can change, but my current opinion is they pretty much stated that they're going to go 75 basis points, and I think that's what they're going to do. I think they'll do 75 because it's kind of in the middle, and it gives them some wiggle room. Now, there's also discussion that their next meeting after that is, I believe, September. I think in August is the Jackson Hole meeting. So we'll hear talk coming out of that, but the next meeting itself is, September. So if they hike 75 basis points in July, I kind of think they'll go at least 75 again in September unless something changes that. So, and I don't expect anything really to change that trajectory. We'll see. So we looked at the calendar from last week. If we look at the calendar for next week, and again, this is investing.com, the economic calendar, so you can get what's upcoming. You can also see the results, and I try to post the results in this Surf the Markets channel in our Discord, and you can find an invite to our Discord in the description box below. Also in the social media links on our homepage, beachbumtrading.com, bum without the U. So again, as this data comes out, I try to capture it and paste it in the Surf the Markets channel within our Discord. So we hope you'll join us in our Discord as well. I also have posted the earnings calendar. We'll see that in a minute. So Monday, we got some Treasury bills. Usually Monday's not terribly exciting. We got some housing market data, and we know the housing market is rolling over, so you can see they're expecting it to continue to roll over. Building permits, again, we expect a decline in housing. Got oil inventories, and again, this has become more interesting because of the volatility in the energy, oil, and natural gas markets. More mortgage data on Wednesday. Existing home sales, more oil. So again, we expect, energy is going to continue to be volatile. And the Thursday, typical jobless claims data. We've got some Philly Fed data, so that might give us an idea of the job market. More Treasury bills. And then Friday. So it looks, pretty typical in terms of economic calendar. Again, we're kind of, between now and the next FOMC meeting, again, we're kind of trading in the eye of the storm again. We know what the CPI and PPI data look like. There'll be all this speculation about what's the Fed going to do, 0.75 or 1 point. You'll hear it both sides, I'm sure. Just while I'm here too, you can see the earnings calendar here just by hitting the earnings calendar tab in investing.com. We're starting into the heart of the earnings calendar. again for this quarter. You heard banks started reporting. They're early in the earnings season. Got Bank of America on Monday. And then again, you can see who all's reporting. You're going to want to keep an eye on this, particularly if it's a stock that you hold or you're looking at buying, if it's in a sector of somebody that's reporting. We've got things like Netflix, J&J, etc. So yeah, we're in the heart of earnings season, and earnings are really going to matter. If somebody misses even or gives poor forecast, they're going to get hit hard, and there's going to be a lot of sympathy plays. So if one of these companies in a sector reports poorly, others in that sector are going to get hit in anticipation that they're also going to be reporting poorly. So again, you can go in that more detail. I also have the link to the graphic, the Benzinga graphic, both in the Surf the Markets channel in our Discord, and it's also linked in the notes. So this is a nice graphical view that Benzinga provides, so you can see a highlight of the main companies that are reporting earnings. So and that looks like that's the wrong link. Okay, I wasn't at the end. So there's July 18th. So again, we see IBM, Bank of America, Charles Schwab, Goldman Sachs. So, Netflix, and we got tech, we got J&J, so we've got pharmacy, Novartis, Truist, more banks, Biogen, Biotech, Tesla. Again, it's going to be pretty volatile this week. So yeah, keep an ear out on the earnings if it's stock you own or stock you're looking at, because earnings matter. So particularly this time, as we're going to see, are they already being impacted? What's the impact on inflation? What are they doing about it? Are they cutting back, laying off? How are they going to handle a recession, etc. So earnings matter. So again, you can get to our Discord as well through, there's the invite link on our homepage. I'll let that come back up while we go forward. Okay, so we talked about the next FOMC meetings. Yeah, it's going to be, an exciting week. I was surprised how, it was an exciting week last week. We had a lot of volatility, low volumes, though, in general. So we talked about earnings calendar. Now we'll look at the market screen in Webull real quick. And again, you can still get 6 free stocks with Webull, I believe. If you're not already using the Webull, it's our favorite trading platform. We do most of our trading in Webull. They've been running this since their 4th birthday anniversary. 6 free stocks, kind of the best deal I think I've seen. You get 2 when you open your account, up to $300 each. And if you deposit any amount, even $1, you get 4 more fractional shares, up to $3,000 each. So if anybody's not already using Webull, we highly recommend it. You can get 6 free stocks. You can always just cash them out if you don't want to continue to use the platform. But we love Webull, particularly the trading hours from 4 a.m. to 8 p.m. is pretty much the earliest trading hours, and sometimes there's gap up, gap down at 4 a.m. So I'm often up, or typically up, looking at the gap up, gap down, or opportunities that are available at 4 a.m. that I can take advantage of in Webull. And unfortunately, you can't take advantage of that in many other platforms. So I'm on the online browser version of Webull. This is the markets tab. I like to look at this histogram to see what kind of distribution we had. This is just Friday, so we see, Again, it was a rally day, so we had a lot more advancers than decliners, but we could see the advances were generally small. So again, all indications are that was just a bull rally. We'll see if we get a couple days of bull rally before it rolls over, or again, we might see a consolidation in the NASDAQ and the Dow and the Russell, and maybe we'll turn back up. We'll see. See, though, there was more inflow in the NYSE than NASDAQ. So even though it seemed to be more stable, it got a little pop at the end of the day, but not terribly exciting. You can also see the upcoming earnings calendar here on the Markets tab in Webull. So if you hit calendar, you can see earnings, dividends, splits. And again, it'll be the near-term calendar, so we can see before market, after market close. So we've got Bank of America before market open. IBM's not till after market close. It's something you can see here. That's not as easy in the graphic view to see, when are they reporting earnings. So then I'm going to look at the weekly best performing industries. So again, we see a lot of energy, a lot of volatility in energy, coal. Everything else, utilities a little bit. Everything else is pretty mixed. Investments not good. Construction not great. Again, natural gas was extremely volatile. It was down below, almost broke, I think, below 6, and now I think it broke above 7. So it's been extremely volatile, which is a great opportunity. We know how to swing natural gas using boil up and cold, KOLD down. We've been playing that, and I know a lot of people have been making good money swinging that and oil back and forth this week. So we'll look at some of the ETFs. We'll see which direction they're pointed right now. So up Dow, up Bull, S&P, up on the Russell. So they're all pointing up right now, and down on the VIX. So SVXY is our favorite ETF to short on the VIX. And obviously with the VIX dropping the way it is, that one is up significantly. So see, almost everything was green. Energy a little negative. Basic materials has gotten beaten up due to the dollar strength, and we'll see that in a minute. We'll talk more about the effect of the dollar strength on our trading and some of these commodities, etc. Everything else was pretty much green. Commodities here, gold. So they're betting on a turnaround in gold. Natural gas up, gold, energy. High yield 20-year, yeah. So yeah, bonds been volatile as well. Now we'll look at the futures in FinBiz, and again, I've got a video that goes in detail about how to use the futures tab more. This is one I keep up pretty much all day long. I like to see what the futures are doing as a precursor for what prices are going to do in the various ETFs, potentially in the companies. So again, I like to obviously view the charts so we can see these little pops in each of the indices, but we can see, the NASDAQ here is not showing that it broke its previous high. Same thing with the S&P. Dow didn't break its previous high. So again, these are all looking more like a bull rally in a bear market right now. This guy is interesting, and we'll talk about this tomorrow about how to play this drop. And you see this extreme drop in the European stock market and also in the German, the DAX. I've been looking for ways to take advantage of that, and I think I found a couple that we'll talk about tomorrow. So again, tomorrow in part 2, we'll talk about particular stocks that we or ETFs, etc., that we want to put on our watch list to trade for the next week to take advantage of these strategies. So we see oil kind of spike down again. It was very volatile. You see this huge drop. So again, we typically trade oil down using DRIP, which is a leveraged ETF to short oil companies. So we typically use DRIP. You can also use SCO to short WTI crude. So DRIP or SCO to short. Long is Gush or UCO. We see all the oils, gasolines coming down, and we see the volatility in natural gas. Again, it was very volatile, great for day traders, scalpers, etc. And again, we trade natural gas up using boil and down using cold. Again, leveraged ETFs to trade natural gas up and down. You can trade natural gas up using UNG. But again, we typically use boil up and cold KOLD with a K to trade down. And we see all the commodities really took a hit. There's two factors, particularly with gold and the precious metals. Is the dollar strength. We'll see how strong the dollar was, and that affects any dollar-denominated commodities, including oil. So as the dollar has gotten ridiculously strong, it pushes all these dollar-denominated commodities down, and then the other factor is recession. So copper also particularly is affected by recession fears, China slowdowns, etc. Anytime they think the economy is going to slow down, copper takes a hit. And there is an ETF I've been watching to trade copper at COPX. We'll take a look tomorrow and see if the risk reward profile looks like there's a good trade using COPX on copper. Also, I've been watching platinum and palladium. I've got some ETFs to watch those, to trade those when they become an attractive risk reward profile. I've also found a new ETF to trade corn, which is corn. So I've got that added in our database and in our spreadsheet to be able to trade corn. So again, these commodities coming down like this are presenting and going to present very nice opportunities. And going forward, we'll talk in more detail about how we can take advantage of these opportunities in the commodities and kind of distinguishing, the supply and demand curves on them, because there's some difference between ones that they can easily increase supply on and ones that they cannot. So we'll talk about that in more detail, but in general, this is starting to look very juicy in terms of these declining so severely. And, I like to trade the extremes. So I love to see, like when that coffee, I saw that one, there's an ETF to trade coffee, Joe. When I see something like that, that piques my interest and I'm starting to look, okay, is it time to buy yet or not? Good morning, Douglas PC. Thank you for joining us. Glad to see you again. So we can see how choppy bonds were again with all the inflationary data, recession fears. We had risk off, so the prices went up, and then the yields had to go up because the interest rates are going to go up. So again, bonds were extremely choppy. But here's the dollar strength as it hit the highest in 2 decades, particularly against the euro. The euro went actually below parity. So you could get more than €1 for a dollar, and it hasn't happened since like 2002. So great time to buy a bunch of euros and plan your European vacation. In fact, I was asking around to people where I could get euros without having to pay the exchange rate. I remember we were in St. Martin the last time we had to use euros, and it was $1.5 to the euro. I remember back even farther back, it was 2.12 to 1 British pound was 2.12 dollars. So you can see how strong the dollar is right now, and that's driving again a lot of the commodity prices and a lot of these dollar inflows. Obviously, if the dollar's real strong and people feel like the U.S. economy is strong, then they want to buy U.S. Treasuries, and that pushes the price up, even though we know the Fed is selling them. So a lot of this has to do right now with the dollar strength, and we'll talk about that a little bit more. So again, if anybody has any questions about any of that, please feel free to put them in chat. If you're here, put them in the comments for later. Join us in the Discord. We have channels to talk about ETFs, forex, currencies, commodities, etc. So we could talk about all those various topics there. UROY, yes. Yeah, come back tomorrow, Walter. We'll talk about UROI because we went in and out of UROI. We're back in. We bought it, took profit, and we bought back. I think we bought back cheaper. Yeah, come back and we'll talk about UROI as well as some of the other uranium plays. So yeah, that area is very interesting. And yeah, I saw your posting, Douglas PC, about cold. Yeah, I agree. The VIX is low, but it's going lower right now. Cold is a great day trade, get great scalp because of the volatility in natural gas, cold and boil, because they've been flipping back and forth. But in terms of any length of time, you see it's kind of been sitting now between 6 and 7. So if I were going to short natural gas, I'm waiting for it to go up above 9 for any kind of longer term short. Day trade, etc. Yep, great. But boil and cold. Again, people have been making a lot of money day trading and scalping natural gas with boil and cold, trading oil with gush and drip. So definitely, if you're a day trader, scalper, great opportunities right now in trading energy. Coal, same way, but people are typically trading like BTU, and there's a couple others if you want to day trade coal. Again, uranium, Walter mentioned UROY. You'll see tomorrow we've been trading and watching DNN, UUUU, URNM, etc. Yeah, uranium's another great play right now. And we'll talk about that more again tomorrow. Okay, so let's talk about some of our strategies. How do we trade when inflation is hot, 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 and sticky? So we've been talking about this for quite a while, and we've talked about, for like I said, quite a while about how to inflation-proof your portfolio. So if you go back to the previous game plans in our playlist, you can see the various discussions we've already had about this topic. So I'd recommend that. I don't want to reiterate all those points, but we'll talk about some of them again. Yeah, we were talking about that earlier, Douglas PC, as well. Is it all indications are that Friday was a bull rally and a bear market. Now we looked at the indices and we saw that the Nasdaq, the Dow, and the Russell may be consolidating in a bottom, but we need some kind of confirmation. It really could go up or down at this point. And we need some, if it's going to go up, we need it to break its previous high to continue up with some volume, with some strength. So again, to trade inflation, some additional points is, focus on necessities. Is people are going to be cutting back, right? Everything's costing more. They have limited money. That's why consumer discretionaries are not a good place to be right now, because they're going to be cutting back on anything that's discretionary. But anything that's a necessity, they have to purchase. That's a pretty safe bet, right? So things like food, utilities, they're going to keep spending. And that's why we saw the utility sector is doing well. That's why we saw consumer defensives is doing well. Healthcare, your prescriptions. So the pharmaceuticals are doing okay. Again, those are necessities. Those are things people are going to buy no matter what the inflation rate is until they can't. Um, the other thing is companies with products and services that have pricing power, so that if they can pass on the inflation to the consumer, and the consumer's going to take it. Again, a lot of those products are food and things like that. So if the price of groceries goes up, people still have to buy groceries. So those companies producing those products can pass the inflation on, and they can maintain their profit margins that way. Another way they do it, and things like Frito-Lay, et cetera, do, is they reduce the package size. So the price doesn't change, but you get less for the same price, or they raise the price a little bit, and then they shrink the package size a little bit. So that way people don't notice the price hike as much. But the size of the package never goes back up, and the prices typically don't ever go back down. So eventually they just make more money when their input costs are reduced. So another thing is assets that appreciate with inflation. So any kind of asset that is going to appreciate in value along with the inflationary rate, and the typical examples are land and real estate. Is as inflation goes up, pretty much the price people will pay for real estate goes up, rents go up, and in fact, rent is one of the major factors of inflation right now. So those things are relatively inflation proof. We tend to play real estate with Reits. We're not directly buying real estate, etc. I like a number of the Reits. I don't like the mortgage-based Reits because you're at risk of defaults. But things like which is a commercial real estate company, dividend aristocrat. They've been raising their dividend for a very long time, and they're relatively stable. We also own Stag, which is an industrial REIT, again, warehouses, distribution centers, etc. There's other good REITs that you can look at, and they've become popular, so the prices are kind of up right now. There is an ETF called Land, which I think is farmland. I think it's kind of high right now. But again, those are things that are relatively safe because they're going to appreciate with inflation. Things that do not appreciate with inflation, again, those are going to be at risk as inflation continues to be hot. So a couple of topics too we started talking about last week, and I'll just very quickly, I don't want this one to get too long. But we started talking about some of the dollar strength, and we saw the dollar strengthen even more this week. And companies, well, there's positives and negatives, right? Okay, so U.S. companies that are making money in foreign currencies and having to convert them back to dollars are going to get hurt. So your Apples, maybe some of your other FANGs, Facebook, Google, etc. Anybody who's making a lot of money in foreign currency, having to convert it back to dollar, they're losing a lot of money, right? They lost 50% on the euro conversion. But any foreign company, if you got a European company making a lot of money in dollars, well, they just got a 50% raise on that money, right? Because instead of getting, 2/3 of a dollar or 2/3 of a euro for each dollar, now they get one. So that's a good deal. So again, it makes European travel very attractive, right? So you got a 50% discount on going to Europe right now. So we did see some of the airlines benefited from that. Some of the travel companies are benefiting from that. Possibly, your Airbnbs and Burbos and things like that may also benefit. We'll see. But those are things to think about. Is this dollar strength is now a major factor in who's going to do well, make more profit or less because of the foreign exchange. So another thing we talked about with inflation, and we saw the retail numbers for June actually were already better than expected. That's because some people, the smart consumers, figured out if they buy now with the hot inflation, they're going to get a better price now than they will in September or in December. So I already heard people are buying for back to school and the holidays already due to the inflation, and also they're concerned that it might not be available if you wait for back to school or the holidays. So I expect July retail is probably going to be pretty good too, with Amazon Prime Day and also people buying early. And then as layoffs and inflation eats into people's savings, etc., and the recession looms, I think then retail is going to take a hit. So something definitely watch for that rollover in retail, and we'll talk about a couple ETFs that we're watching for that rollover in retail. Well, thank you, Walter. Again, not financial advice, but that's what my opinions as to where we can find opportunities to make money. So I hope that all helps. So. And the other thing we talked about is, we continue to hear layoffs. Now it's all the crypto companies. They've been laying off. Meta's laying off. They did initially decrease their hiring, and now they're laying off. So Microsoft's laying off. So, and that has a cascade effect. And we talked about that. And also it's going to stagnate their growth. So if these were previously, quote, growth high-tech companies, well, that's going to stagnate their growth because they, have fewer people, right? And they're not going to hire. And to ramp back up is not something you can do overnight. So something to watch out for. Don't assume that those companies that grew at X% in the past are going to continue to grow at that rate. So. And then we talked about the millennial stuff, and really I just want to hear what else y'all think. One of the questions I've been posting around in the chats is, which I don't know the answer to, is do millennials go to theaters? I.e. AMC. What's the impact on AMC and other theaters and things like that? There's some of we know they like experiences, but where do they spend their money? Do they actually go to theaters? I don't know the answer to that. I'd love to hear from somebody if millennials actually go to theaters, and what else do they do? Where do they spend their money? Where do they not spend their money? And how's that going to change as there's more pressure with inflation, recession, if they lose their jobs, where are they going to continue to spend money? Where are they going to stop? Because millennials are either the first, or they're either the largest generation or the second largest to the baby boomers. And I think they're the largest, but I don't know offhand. I know baby boomers and millennials are the 1 and 2, and baby boomers are on their way out, and millennials are on their way up. So that's why that is important, is follow the money. Where's the money going to go as these pressures put pressure on the millennials? So, and then also we still have the poll as to when should we have these game plan videos. If you haven't already voted on the poll, please do so. If you're watching this as a replay, please go out to our community tab, vote on the poll, let us know what's the best time for these videos. 10 o'clock seems to be pretty good. It was the most popular. Again, if anybody has any further questions, please post them in the comments here. Please join us in the Discord. We also have a Facebook group. You can post them in the Facebook group, and you can always hit us up on our social media. So please vote the poll. Right now, 10 a.m. still the most popular. We could still use more votes. And again, you can find links to all of our social media sites, the invite to the Discord, etc., in the description box below, and also in the link section on our homepage. So again, let us know what you think about this in the comments in the Discord. Let's talk about it. And another thing is, please share this with your friends. Let's continue to build this community for everyone's benefit. The more good traders we have sharing ideas, helping each other out, the better it is for everyone. I'm concerned. I think we lost a lot of traders in the decline in the markets. It's my opinion, you can make money in any market, bull market, bear market, sideways market, whatever. And I don't think people knew how to do that. And therefore, I think they left. And that's unfortunate. I'd like to get some of those people back. We'll teach them how to make money in a bear market. There's no reason you're not making as much or more money in a bear market as you did in a bull market. So yeah, let's bring those people back. If you know anybody who left, hopefully you can help educate them, and we'll try to help them succeed in their trading career. So again, let's talk and see how we can bring some of those people back as well for everybody's benefit. So I hope that all helps. Again, you can find the notes in the Google Drive as well as all these links, etc. And please come back tomorrow, and we will talk more about the individual stocks we're going to have. We have quite a few. I've been working hard to also find a number of other ways to trade some of these opportunities. So come back tomorrow. We've got a lot to talk about. So thank you again for joining us for today's live stream. Also, just a real quick plug is I'm going to jump over to Mighty Soldier Trading as a nice, there we go, has a 11 o'clock live stream with I can't pronounce her name, Agnieszka, and also Peter Robbins. So I'm going to head over there. So I'd recommend Mighty Soldier Trades. Go join us in the live chat over there. This is more psychology, trading psychology, etc., which I think is also something that's very helpful to keep you not. We've talked about beach bums, don't panic. Keep a positive attitude. You can do it. We can make money in a bear market. We know how. So again, I will see you all over there. And hopefully I will see you tomorrow for part 2 of our weekly trading game plan for the week of July 18th through July 22nd. Thank you again, and have a great day. Bye.